Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, and on the line I have Sean Udall, the tech stock strategist, getting up real early this morning to be on the line with us. Sean, how you doing today?
I'm great. How are you guys?
We're doing good. Now, our first guest today was Jeffrey Hirsch, and he's the editor-in-chief of the Stock Traders Almanac. And we started talking about seasonal patterns and the January effect. Do you have anything on your radar in the tech sector for January?
Oh, absolutely. So, first of all, I think the January effect is probably one of the most profound seasonal impacts. There's a lot of seasonal things that kind of, in fact, sometimes you almost have to fade them because they don't work every year. But the January effect is very, very powerful, and it's basically dictated by a ton of tax loss selling and a few other things. But this is a very interesting year for it because what has the market basically done this year? It's ground higher. So there have been two huge corrections, and there's been one massive technology correction in the spring. So, and a lot of those companies haven't really recovered, especially stuff that's sort of under the large cap realm. So something like a Ring Central has never missed a quarter since they've been a public company. They've sort of been caught up in this whole IPO. All the IPOs are overvalued. Anything that's a SaaS software company is overvalued, blah, blah, blah. And yet, again, they've never missed a quarter. And this stock is just, I mean, it was never super expensive as a new high growth company, but it's just downright almost stupid right here. So that's a name. That's one of my top names. Something like a Pandora could be very, very interesting. Now, this is a name I was short. In fact, I think Pandora was either my first or second best short this year, but I'm now no longer short. I'm now long. I think Pandora could get hit with the January effect and combo with renewed M&A rumors. I mean, the bottom line is, I've written a lot about the January effect. I'm going to write a lot more about the January effect. This is a weird year. Normally I kind of have a list of, 8 to 15 stocks that I'm playing for the January effect. And I'm going to have at least that many this year. But I mean, I could have a list that's 100 stocks deep this year because so many companies have been impacted by this sort of the spring correction that a lot of these tech stocks got hit in the the correction we just had that it has evaporated. And a lot of this stuff hasn't come back, even though their fundamental growth picture is really good.
So you're basing this primarily on the fundamentals then. It's like the technical setups. Yeah, you'll take a look at it for, possible entries and exits. But like for this Ring Central, what was that stat that you gave on them?
RNG.
Yeah.
Oh, the stat, they've never missed a quarter. I mean, they've either beaten raised or beat and guided in line every single quarter as a public company. And yet, I mean, the stock's at $12. It was cheap at 18. So
what do they do?
This is one of those Ring. In fact, well, if you call anytime you listen to Bloomberg Surveillance, they always say sponsored by Ring Central or coming to you live from Ring Central, but it's basically a phone system. So Ring Central comes in and they basically replace a company's phone system, and they do it at a way cheaper cost than Verizon or Sprint or whoever, right? So if you still need an industry class phone system, Ring Central does it. They do it way cheaper, right?
I do believe Benzinga uses Ring Central.
We do.
We do
Oh,
here,
okay.
yes.
All right. There you go.
You guys may use Ring Central. I don't know. I mean, tons and tons of companies use Ring Central. It's a very, very good product, very good, very sticky. And here's another one. This thing could be total M&A fever, right? I mean, Google. In fact, if Google really wanted Hangouts to work at an enterprise level, so they wanted, hey, we're gonna have Google Hangouts be an enterprise level quality application that companies can use and do real time video conferencing across the globe, right? Right now, if you try to do that, it's going to be choppy and not work, and everybody's going to have to turn their video off and blah, blah, blah. So if they bought Ring Central, that would basically solve that problem. They'd have an industry-class PBX phone system that they could basically market to the global enterprise. That's just one example. But like I say, people might want to check out some of my stuff because, I'm probably going to have 3 or 4 more posts on the January effect. I had a big one already. So, but no, I mean, the January effect is a seasonal effect. It's one of the few seasonal effects that I actually do think have a lot of validity and tend to work every year. Some years the January effect is far more pronounced, and it's far more pronounced than a year like this year. I mean, put it this way, because this year, if you haven't been all over Apple, you haven't made a whole lot of money in tech this year, unless you've been a really good trader and you bought stuff at the gut-wrenching lows, and you sold it after the 20-30% pops and rinse repeat. But the bottom line is, if you haven't had Intel, Microsoft, Apple, a few big mega cap stars, tech has been kind of a bear market this year. And so that's the kind of year where you have this big differentiation in performance where the January effect can really come through.
So these stocks, are whether you play them outright or you play them through the options, or these kind of things where, you're waiting for that move in the first couple of weeks in January, and if it doesn't come to fruition, you move it aside, or with something like this Ring Central. I mean, you talked about some fundamentals there that are unbelievable. Do you put a time frame on these trades, or for something like the Ring Central, the Pandora, you just you're in, you're picking your spot, you're picking your exit?
I probably do, especially if it's some of these I think are high enough quality companies that they can work their way into my portfolio, right? So if it's a portfolio position, that's one thing. But January effect trades, I typically say, well, first of all, the January effect doesn't happen starting January. If you're going to play the January effect and do it successfully, you got to start looking at these things basically right now.
Yep.
In fact, I started looking at them about 2 weeks ago, because the real January effect actually happened sort of Thanksgiving week to the end of December is where generally you get half to 2/3 of the move. And then if there's a continuation and there's a powerful move into the next year, you can get another big move actually in January. So years and years ago, the January effect actually occurred after the calendar changed. But, it's been arbitraged away, and people have dissected this thing 8 ways to Sunday over the last 30 or 40 or 50 years. So the January effect move now tends to happen before the calendar rolls over. So it tends to happen in the last 4 to 6 weeks of the year.
Do you try?
So, I'm trying to be in positions now,
right?
And I might ride them all the way through January, but there's a lot of them I may literally sell last week of December.
Is there any that you look to? And I mean, I know you don't like to get too cute in the markets, but do you think there's any that you may identify as some tax loss selling and try and play it from the short side?
Yeah, earlier I think you could have done that. In fact, I think the last correction we just had was largely driven by institutional tax loss selling. So September is a really good month to look for shorts, because September is when the big boys are basically the big money guys. They're not dumb. They don't wait till the last 2 weeks of the year to do their tax loss selling. They basically do it into September. Some of them have their year ends in September, by the way, too. But typically, all the big institutional money does most of their tax loss selling before December or before December end. And then there's a lot of times there's another round of it in October and November. So I think if you're going to play kind of stuff into year-end tax loss selling, that's earlier in the calendar year. In other words, it's too late now.
Okay. You made an interesting point about, if you weren't in Apple and some of the old school techs, you were left behind in the dust. And boy, that just brings Google up to, to the top of my mind. Someone asked about Google in the chat earlier. The stock made its all-time closing high and closing price back in February. And then you had, the split, and it's just like blah. I mean, what's going on with Google?
Well, I think a few things. I think, first of all, for some reason, the world never really wants to lift Apple and Google at the same time, right? There have been lots of times where you can make a case where both stocks really are doing well and which should go up at the same time. But generally, if one of the stocks is doing exceedingly well, it's going to pull capital from the other one. So, hey, I'm not going to toot my own horn any more than I already have, but I've nailed Apple 8 ways to Sunday, right? So the Apple trade is still going. The Apple fundamentals are still far better. Even though I'm up 85 to 95% on Apple common, I still think it's got 30 to 50% more to go. But the easy money has been made on Apple, but people are getting kind of in that. In fact, Apple could go into that kind of silly phase, right? So all this winds up. It doesn't help Google, because Google's a huge market cap company, and there can only be so many huge market cap companies that are really being pushed at any given time. There's only so much room, so much money being spent to get these things to lift. So there's a structural trading sort of element. The other big thing though is, let's look at the facts. I mean, Google has literally missed 4 of the last 5 quarters. In fact, they may have missed 5 of the last 7. And none of the misses have been terrible. It's not like Google's not putting up decent results. But you're talking about a company that's missing the official analyst estimates. They've done so again 4 of the last 6, 5 of the last 7 quarters. And we are talking about a pretty big growth acceleration. Trees don't grow to the sky. I loved Google. Google was my largest position when they were still growing in that sort of 26, 28, 32, 38% growth rate, 2 or 3 or 4 years back. And now Google's having a hard time putting up 20% growth quarters year over year. So, the growth is decelerating. There's a lot of things happening too. I mean, I've been all over this huge advertising thesis. So what's happening around the edges of Google? Why is the growth decelerating? You could say, well, the company just got to a point they can't really grow anymore. I disagree with that. I think Facebook and Twitter are now doing so well that it's actually stealing market share thunder from Google around the edges. So how has Facebook gone from 4 billion to 15 billion a year in revenue or more, and how has Twitter gone from basically nothing to 2 billion? It's going to rapidly be 3 billion a year in revenue. Well, the revenue's got to come from somewhere, and the ad companies are basically they're moving their budget dollars to things that they think are more effective.
Is Google in your portfolio anymore?
It's not
at all.
No,
you don't have any Google.
No, I'm out of it.
And would you get?
No, I did buy it. I did buy it in the low 500s not too long ago, right in the teeth of the last correction, right after they reported earnings. I thought between 505 and 510, it was ridiculous. So, but I pretty much, I got about a 10 to a 12% bounce out of it, and I took it. So I will buy Google. I'll buy Google if it becomes a value buy. But it's not. Again, I need to see something. I think. I need to see that they address social media. I need to see that they quit dramatically overpaying for M&A. They used to be the best M&A shop in Silicon Valley. They maybe still are, but the last 2 or 3 deals I think they've dramatically overpaid for. Thank God they didn't buy WhatsApp, by the way. They were in the running for WhatsApp, and they thankfully let Facebook dramatically overpay for WhatsApp. So at least Google walked away from WhatsApp, so that was smart. But the bottom line is, it's sort of, I view Google a lot like I viewed Apple in 2012. Everybody in the world was all giddy on Apple, and they put a bunch of $1,000 price targets on it. And it was very clear that Apple's growth was decelerating back then, and they didn't address certain issues. And so, same thing. I completely cleared out of Apple, and Google was my largest position back then. And Google's in kind of the same deal. Their search market's getting kind of chipped away at the fringes. By the way, I mean, Yahoo just did a very interesting deal with Mozilla Firefox. They're going to be the default search engine. Supposedly, Yahoo's saying they're going to do some very dynamic new search changes. Might one of those search changes integrate Twitter data real time? I don't know. We'll see, right?
Right.
So, but that's where things are going. Things are going to, in fact, the next great search engine is going to include Twitter data. I'm 100% positive on that. And I don't know who that's going to be. Maybe Google can do that deal. They could lock up the deal and they could get Twitter data. But I think Yahoo and Microsoft are going to make a run at that exclusivity first.
What about, do you follow GoPro at all?
Yeah, I don't really like it.
Yeah, and they're doing that big secondary at 75. What don't you like about it?
Well, this is just one of those cases where they have a really interesting product. They're still a pretty young IPO, but now you have IPO lockup issues, and the stock got kind of. In fact, I kind of think GoPro at 80 plus is very similar to FireEye at 90 plus. So everybody remembers what happened to FireEye. It was everybody's next technology darling. By the way, that's a company I really like, but. I didn't like the stock at $90, and it just, went up too much too fast. It went from $35 to $95, and I think GoPro is going to end up looking a lot like FireEye. It's going to have a big decline. it's probably not going to do anything that wrong. It's just going to kind of go from being extremely in favor to sort of out of favor once the momentum breaks. So it's sort of a dangerous stock right now. In fact, I look at GoPro as for potential shorts.
What about the $50 level? If it came back down to 50, would you have any interest in it, or you just kind of
that starts piquing my interest? I probably would get far more interested though if it just gets, because what'll probably it won't go down to the point where it gets rational. That's the problem. When growth stocks get beaten up, they kind of go they just rip through any point of rationality, and they kind of find a completely irrational point. So I'm not sure GoPro really finds a lot of footing. 50 could be interesting, but it'll probably just blow. If it does really rip lower, it'll probably just get to some stupid level that doesn't make any sense.
Right.
Kind of like what's happened to FireEye and Twitter and what happened to Splunk earlier this year. I mean, Splunk is a great example. Splunk went from 106 to $40. During that whole time, Splunk didn't miss a quarter. They didn't have a bad report. They're, boom, growing 55, 50%, 48%, 60%. So, they had to kind of re-earn it again. These lockup expiry deals can be a tough deal, especially when companies come out with a real limited float. So you have to be pretty careful with it. Not all IPOs are created equal, even the darling growers. And if they come out with a really limited float, and then all this distribution starts happening in the stock, it's not that hard all of a sudden for some smart people to come out and put a bear case on it that all of a sudden everybody believes. And when the buying on these momentum names dry up, you got to be pretty careful.
What about Baidu?
That's another one I don't really like. In fact, if we could do a Twitter search history, and I wrote some stuff on TechStrat about this too at the time. So I was long Baidu, I want to say between 85 and $90 a share. That wasn't that long ago. That was only about a year and a half ago. So I kind of went from disliking Baidu to liking/loving Baidu. And I even got in some pretty good Twitter debates on Baidu. And people were saying, oh, my God, this is such a great short. If it breaks 80, it's going to go to 50, blah, 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 blah. Well, actually, Baidu was really cheap at $85, and it's a $245 today. So, I guess if you want to hope and pray and, think that there might be a tree that grows to the sky for the first time in history, Baidu might work okay. But I don't really think Baidu is that attractive here. There's so many other names that are so much more attractive. And frankly, the technical setup better. If you look at Baidu's chart, the chart, that does not look like a real enticing chart to me. In fact, this looks like I have a sell signal actually on Baidu. I look at my technical system right now. In fact, I'm glad you mentioned it. I'm gonna have to kind of look at some. I'm gonna have to look at some shorts. Now, Baidu is probably a stock I'll be more interested in shorting later in December, maybe early into January, because it could, if the market kind of continues to melt up, names like Baidu kind of tend to gravitate northward as long as the whole market's going up. So if you have that performance chase that continues and a kind of a year-end flush higher, Baidu probably gets pulled into that flush higher. But geez, it looks like anything over 250 is just a glorious shorting opportunity to me.
We're on the line with Sean Udall of the Tech Stock Strategist. He joins us on Benzinga's Pre-Market Prep, brought to you by MarketFi. Sean, before we let you go, I just wanted to touch on Twitter here. We've talked about it in the past here, and this thing just feels like it's just falling asleep here at the $40 level. What's your short-term and longer-term outlook for Twitter?
Yeah, probably the only danger for Twitter is that you have a situation that it's sort of hated right now. So again, if the market keeps, by the way, I'm not so sure that this market melt-up thesis is going to continue. I'm sort of more neutral on the broad market right now, but let's just assume it does. And so the Baidus go up a little bit more, and Apple keeps churning higher, and just whatever has been loved this year kind of continues to be the winners for the next 4 weeks. So Twitter probably won't get pulled up, right? Now, I would say you want to watch Twitter because Yahoo's search engine is going to change quite a bit in early December. So what's that going to contain? Bing's got to do some things to their search engine. Twitter just announced they're going to basically have indexed all the search history on Twitter. So that's pretty powerful from a marketing standpoint. Advertisers are interested in that data. So yeah, I think Twitter's going to probably be a lot like Apple was when Apple was hated last year at 400, or a Splunk at 40 is now almost at $70. So, I think it's, Twitter's pretty much done everything right from a reporting standpoint. The company's delivering. There's no other company on the planet that's producing, 100% growth at the size they are. So I think it's just one of these things. I think rationality has to come back into the name. And I think people could be very surprised at how well Twitter performs. And by the way, they're not just past the 6-month IPO lockup anymore or the 9-month. They're past the 12-month now. So that's sort of the window of maximum selling with the new IPO is kind of that 6-month to 12-month period. The market's digesting a whole bunch of new shares that are coming. The float has increased dramatically on Twitter, but that's a good thing. That's not a bad thing. So it's probably going to be my stock of the year for next year, although I haven't written all that stuff up yet. But if I had to guess, just to go back in history, Apple was my stock of the year last year. Facebook was my stock of the year in 2013, and I think Twitter might make for a good stock of the year for 2015.
Well, we'll keep an eye on that. Sean Udall, the tech stock strategist, joining us here on Benzinga's pre-market prep. Sean, a lot of great information there. Thanks a lot, and we'll speak to you again soon.
You bet. Thanks as always, guys, and have a great day.